Hi, my name is Arkadiusz Trzciołek. I am a fixed income strategist at PKO Bank Polski.
Volatility on the Polish fixed income market has been low since the beginning of the third quarter. With lack of major data surprises, the thin trading volumes allowed the yields in Poland to stabilize so far in Q3. The Polish market proved pretty immune to yields increases elsewhere in emerging markets. We expect, however, that the yield curve should bear steepen by the end of the quarter. Amid factors supporting Polish bonds was the supply on the primary market. The Ministry of Finance net issuance was actually negative in July owing to bond redemptions. Additionally, the debt authorities decided to skip one of the tenders in August in order not to swell its already hefty liquidity cushion. The scarce supply is arising from strong fiscal situation where budget reached a 9.5 billion zloty surplus in the first half of the year, well exceeding the target for this point of time. We still see a strong demand for government bonds from local investors, partially because of favorable tax treatment of short-term papers for bank portfolios. Therefore, despite the non-residents keep cutting their exposure to Polish bonds on the back of risk of moods, the yields in Poland were kept in check. We continue to expect that yields in Poland should increase by the year-end. We believe there is a scope for bear steepening of the yield curve as we see a larger scope for an increase in the long end of the curve. In the near term, the monetary policy in Poland is likely to remain dovish. The MPC's informal forward guidance sees rates unchanged until the end of next year as inflation remains well below the 2.5% target. Furthermore, President Glapiński questions the need for hikes even in 2020. Such a dovish stance on rates should keep short-term yields in Poland anchored close to the NBP reference rate of 1.5%. Although the scarce supply on the primary market supported Polish bonds in the summer months, it is pretty much priced in by the market and does not lead to further declines in yields. Additionally, the budget surplus has likely turned to deficit in July. Furthermore, the issuance is set to increase from September onwards, which may drive yields higher, especially for long-term papers. The Polish fixed income market outperformed the core benchmarks in the last couple of weeks, as it was less driven by external events. We expect, however, that once summer ends and volatility increases, the correlation between Polish and foreign markets, especially German, should increase and yield spreads will move closer to pre-summer levels. Among factors that may push the yield curve in Poland higher will be the ECB discussion on future rate path, as well as the Fed's plan for further policy normalization. Furthermore, the Polish market was quite immune to global trade tensions so far. However, once it translates to a more pronounced pressure on emerging markets, the yields in Poland may start to trend higher. Thank you for your attention. In case of any queries, please do not hesitate to contact me.